Weekly outlook. Last week we got some interesting data that came out. Looking briefly here at the dollar, we see that we broke the 107 handle and are now in the slide probably targeting the 106. So what happened last week? So last week we got two pieces of data that came out that were pretty important. We had CPI that came out, which is an inflation gauge that the Federal Reserve looks at to see whether inflation is going up or down. And for the last 5 months, we've been getting some higher prints. And so now we've reached the 3% mark. And usually the dollar appreciates when there's higher inflation, of course. I mean, usually when rates are high and inflation is high, the Federal Reserve tends to hold rates. And so that's a hawkish thing to see when it comes to the CPI print. Now, the CPI print came in hot, but the dollar stayed pretty flat. And then on Friday, it sold off pretty heavily. So I probably sound like a broken record here talking about Trump tariffs. But Trump went ahead and announced that he's going to stand off or hold off on tariffs until the summertime. And as soon as that piece of information came out, the dollar went ahead and sold off. So what that tells me is that this whole time, this dollar strength that we've had holding at this level was propped up on the uncertainty and concern of tariffs. Because regardless of the CPI print that should have helped add to the dollar bullish narrative, the market ignored that. If we look at the COT data, it's very mixed. You have the yen continuing to strengthen now. So now their net position has grown, I believe, stronger than the dollar. Yeah. So the net position for the yen is 54,615 and the dollar is only 15,000, almost 300 there. So the yen keeps getting bought. It's really strong here. You have things like Australian dollar, New Zealand dollar, and the pound. They were bought, but their net position is still red in the negative. The euro pretty much stayed flat. The Canadian stayed flat. So what happened with the Canadian, it was more of removing short contracts and adding. So I want to go over the position I had last week that I lost actually on, and it was this dollar Canadian, and my entry was at this green level here. Now, as far as the trade goes, I love the trade and I would completely go ahead and do it again. And so my entry was very well. If you see this whole range that we were at, my entry was at the very bottom of the range. My upside was either the top of the range here at about 190 to 200 pips. Yeah, somewhere around there. And the other upside or profit target could have been this extreme level here, somewhere around this level. It would have been 400 or 500 pips. So my risk to reward was great. And what caused me to get out of it early, because I did close it out manually, was when Trump went ahead and said that he's going to hold off those tariffs. And I saw that the dollar started to slide, and so I was able to close out manually and minimize my losses even more. And even then I was small size here just because I knew how vulnerable the dollar Canadian was to tariff catalysts. It was a loss, but it is what it is. What I got out of it was it made me realize how much of this dollar strength was propped up on the tariffs. Now I know that's really important, right, to the market. So moving forward, I need to keep that in mind. So pulling up the dollar chart, what I want to see is I want to see it go down to the 106 level. If we go ahead and pass that level and continue downward, then I do think that the trend for now in the short term is going to flip bearish for the dollar. But if we see it hit that 106 level with more data that comes out that supports the dollar, PCE, which is another inflation gauge, if that comes out high and if we're still holding that 106 level, then I'll go ahead and consider the dollar Swiss. I like the dollar Swiss at this level here and at this level. This one would be a better one. My entry would be probably here. My stop would be somewhere around here, maybe 120 pips. And my upside potential would be back to the 285. So it's about a 2-to-1 risk. And then this is a higher time frame resistance level here, if you can see this. So if we do start to stall around here and eventually break and retest, then I'll just continue trailing my stops maybe to this level, somewhere like here. But that's what I'm looking at for dollar, if I want to re-enter going for the dollar strength. Another trade that I have going on is the Swiss yen. That on the edge finder, if we look at the top setups page here, is very bearish. The yen has been really strong lately. And the Swiss yen to me is the most attractive because if we look at the carry trade scanner, it basically shows how much you will get paid or have to pay to the broker for holding a certain currency overnight. And if we just look up yen here, you can see that out of all of them, The Swiss yen, they have their interest rate at the time is 0.50, and the yen is also 0.50. So the interest rate divergence is 0, so it doesn't cost you anything to hold the trade overnight. Whereas if you look at something like the dollar yen, for example, our rate at the moment is 4.5 and the yen is 0.5. So the interest rate divergence is 4. So to short the dollar yen, you will have to pay the broker 4% for every night that you carry over. So out of all of them, the Swiss yen is the most attractive for me. It makes the most sense. Trend wise, it's still very valid. You see that here that we're on a clear downtrend. Ultimately, I want to see the yen react off this level, at least target the lows here, which it's in some profit. I'm willing to dollar cost average, but if we ultimately, breach these highs, then in my eyes, the trend will be invalidated and I'll just take a small loss. The yen, this is a very small trade for me. Another thing that I saw that's really interesting here, if we see like long-term strength in the yen, because the yen actually does want to go ahead and continue to raise their rate. So actually what would happen is the yen fundamentally will be stronger than the Swiss. Right now they're even, but the yen does want to go ahead and continue hiking up the rate, and if that happens, a lot of carry trades will unwind, similarly to how when they first came out of the zero rate, and that might add to this yen trade. And I saw this higher time frame, this trend line that we're in, and so if we break this trend line, I want to target at least this 159 160 level. And so that's like about, if we look at from where I entered at, that's about 1,000 pips, so that'll be nice. So this is a long-term trade. If we just completely reject this level and start making new lows, if we break this right here, then I'll add more size to the trade. And yeah, I think that's a good one long term. So really right now I'm just in a waiting period, honestly. I just want to see what happens if we hit this 106 level. I'm gonna be traveling for the majority of this next week, so that gives me time to let the market do what it needs to do. I will be keeping up with news that comes out to see if it changes sentiment, if it changes market dynamics. So that's going to be my main priority, honestly. Because I'm flat and I only have that one position open, I'm just going to have to wait. I mean, that's just the name of the game. You have to wait sometimes and not do anything. That's probably the best thing to do. So, but if I do make a trade, or if something does come up unexpectedly, I will have my laptop. I'll make a video on it, explain why I'm doing it, and post it. But thank you for watching. I really appreciate it. If there's any feedback or anything you might want to add, I'm very open. If I provided any kind of value, please consider liking and subscribing. Thank you, and have a good night or a good day. Bye-bye.